The stock market and crypto are rallying, and that's because of Rule 446. All markets are intercorrelated and interdependent. Tier 1 charts are the engines of financial markets globally. It's very important to look at the particular levels on these charts, especially the smart money buy and sell areas. There's been some really good news on the JOLTS job openings as well as yields coming down, the DXY weakening, and the Grayscale win against the SEC, but it's all about the Tier 1, Tier 2 and Tier 3 charts and how they intercorrelate and interreact. Here you can see very clearly that crypto came up, but the S&P 500 was coming up beforehand. Many people inside the crypto market will think crypto is purely rallying because Grayscale whacked the SEC in court. That's certainly very good news for the crypto space and opens the way for Bitcoin spot ETFs. And this is very powerful for widespread adoption of crypto. The widespread adoption of crypto, or the potential of it, didn't drive the S&P and the stock market higher. Something else did. We're going to explore these things and a lot of other factors that will help you to get synchronized in with the market. I'll also share trades that I did in the past 24 hours, like I did yesterday. Let's run the numbers. Inside our community, we talk about smart money, the way to think like smart money, the way to act like smart money. I'm very grateful for sharing this time together. And in just a couple of episodes, we come up to our 1000th anniversary. Wow! A big thank you to everybody that shared their very kind comments. In the past 24 hours, the main markets had an absolute field day. There were broad-based gains across every single sector. Tesla and Nvidia did very, very well. In approximately 22 days, there'll be the next FOMC meeting. The probability of a 25 basis point increase in the federal funds rate has fallen from 22% to 14.5% because of jobs. The S&P 500 actually logged its strongest one-day gain since June the 2nd, while the Nasdaq notched its strongest session since July the 28th and closed at 2-week highs. To understand why the markets rallied, you must understand the Tier 1, Tier 2 and Tier 3 charts. The Fed has been very focused on the job market. With the job market cooling, there's no need to keep on increasing the federal funds rate. The JOLTS report coming out jolted the US 2-year yield down and made the indices rally and stocks such as Nvidia and Tesla go ballistic. That also seeped into the crypto market. The US 10-year yield has been weakening of late, and we saw it just get crushed. Falling yields and increased optimism inside the stock market, commodities and crypto have led to the DXY falling. Inversely, that's led to a rally in the euro-dollar. The USD JPY pair, or the dollar-yen, was struggling with smart money resistance at that 146.73 level. It sparked above and then got crushed as the US 2-year yield, the 10-year yield and the DXY all decayed. A couple of really key things to note, and masterclass students, you get my live chart in TM6. We saw the yields decaying, the dollar coming down. A few days ago, we noticed that junk bonds was repairing. This is risk-on activity, very, very good for markets. Also, the VIX has been coming down, which is increasing the risk-on appetite inside crypto, inside the stock market. The fall in yields and the DXY is very, very beneficial for gold. It's also beneficial for crypto. It's absolutely vital to look at the Tier 1 charts, and we can see the S&P 500 broke out, but it's encountering some form of resistance. So where is the true smart money resistance and support levels? The S&P 500, which is marked up since 1871 with the CTKs method. This indicator is available from ctksmethod.org. We broke out of that 44.39 area, We had a fresh air area up to the 44.93. It's not at all surprising that the S&P 500 started to peter out there, because these are strong smart money levels. The break above this particular smart money resistance level is very significant, and it will be looked at with a lot of interest. We can also see that the next smart money resistance is up at 45.41. The markets could go a little bit nuts from here. People not trained in the CTKs method may think that Grayscale and the SEC decision sparked up crypto, but that was part of it, but it wasn't all of it. It's the intercorrelation and interconnectedness between Tier 1, Tier 2 and Tier 3 charts. It's absolutely fantastic to see the main market and the crypto market turn green. This is going to make a lot of people happy. When looking at the crypto market, we can see currently Bitcoin is up a little over 6%. Solana has also been doing really well. The greatest gainers, top 100 past 24 hours, XTC up nearly 20%. Bitcoin Cash, Stacks, Ton, Rune, BSV, Conflux, XEC and Woo. The greatest losers, top 100, past 24 hours, Fracshare, Curve, Synthetics and a barrage of stable coins. Please let me know in the comments, what does it mean when we have stable coins in the list of the greatest losers? It's an important question to focus your active learning on. And active learning is all about you taking a little bit of time and effort and energy to try and understand the markets. It will make a huge difference. If you've found active learning to be helpful, please let me know in the comments as well. In the past 24 hours, there's been around 165 million in total liquidations, with 120 million of that being short. And you can see all the short liquidations are in red, but Uni, Blur and a couple of others have been long liquidations. When spanning across the 12 hours, we can see still a lot of short liquidations. Across the past 4 hours, we're seeing some long liquidations. This would indicate a bit of a leg down inside Bitcoin, Ethereum, XRP and Doge. What about the past hours? More liquidations, more long liquidations in Bitcoin, SEI and ADA. Just something to keep your mind on. The crypto market has been in the doldrums. There's been little, if any, activity and little, if anything, to get anybody interested, except the professionals who are always interested. There's always opportunities inside every market. As the crypto market hots up, interest in NFTs will start to spike. This is something that you might want to be aware of. And Rule 4, price moves in waves, is a very important smart money rule. When Bitcoin comes up, the alts have a party, and that's because of Rule 45. No alt can escape Bitcoin's gravity. The crypto markets have been incredibly interesting. Over the past 24 hours, they started with a lot of negative price momentum. In fact, the DXY was a good structural support, even though the US 10-year yield was weakening. But with that economic data coming out and a subsequent revision of the probability of the federal funds rate increasing that was going down, that sent the markets into an upward rally. Of course, the news of the SEC's failure against Grayscale was a big contributor as well. But the key is that it was yields that drove crypto up, and they drove the stock market up as well. Also, in concert with that, the falling dollar was very important to push crypto up. The thing to note here is that the alts were bleeding as Bitcoin was coming down. You can see it just here. And then we had that news and we had a big spike, and no alt could escape Bitcoin's gravity. They all came up with it. Where is Bitcoin's gravity? It's that blue line. You can see it here, playing out across each of the top alts. We can see that there were a lot of short liquidations inside the market. Everybody was getting very negative, and they had good reason to be negative as well. When you look at Bitcoin's price, it was coming down and down and down. And then the JOLTS job openings report came out. The DXY tanked, the US2, the US 10-year yield tanked as well, and that bled into so much positive momentum inside markets everywhere. And of course, the Grayscale news was awesome as well. That will drive mass adoption. I'll get into that story a little bit later because it's very important to understand. Before I talk about the key levels inside Bitcoin, I want you to just notice this particular action, this weakening action. And now I'm going to show you some trades that I did during that period of time that were very beneficially helped by this spike up in Bitcoin. Yesterday, the markets look like this for the trades that I'm going to be showing you next. And like I showed you trades in the previous video, the key is to understand the smart money buy and sell levels through the CTKs method, especially Tier 1, Tier 2 and Tier 3 charts. And if you're new to the service, please go to 00 and area 4 accessing the indicators. The masterclass knowledge is very important here. If you don't have the foundations, if you can't stack probabilities, you can't find the market's focus, and before you enter master emotional control, buying and selling will be traumatic. This is the structure of the masterclass, and particularly LV21 and LV22 have been used in these trades. But please understand, you cannot be effective in LV21 or LV22 unless you've gone through each and every video of the masterclass. It's also very important to have your three-way scenario. Know what you will do if price moves against you, goes nowhere, or goes for you. And we go long at spot. We don't use leverage. There are many masterclass students who have gone on to trade full-time, and I'm really proud of those people. And even if you're not trading full-time, if you're just making coffee money returns, make your way up to it slowly. Here's another trade on OMG that took approximately 3.5 hours for a 6.47% return. As always, look at the annualized return on investment. Here's another trade in OMG across 8 hours, 6.77%. Another trade in OMG over 12 hours, 5.4%. And again, the key is your annualized return on investment. Here's another trade on OMG done in 14 hours, 5.34%. And again, the annualized return on investment is the key one, not the ROI. Because if you're turning over small amounts of money like this and you're doing it a lot, you're going to make a lot of money. Unfortunately, many people are confused with return on investment. It's the annualized ROI which is the key. In yesterday's video, I showed you PayPal delivering a staggering 4.4% per annum in terms of annualized return on investment. Anything over 10% annualized return on investment, or 20% even better, is a fantastic thing to do. You can see here this trade in Tomo occurred over approximately 5.5 hours and delivered around 3.36%. Here's another trade in Tomo, and remember, these particular orders were placed when the market was quite red. This is a 7.66% return in around 2 hours. If you look at the annualized return on investment, that's better than 20%. Here's another trade on Tomo. This one was done in about 7 hours for a little over 11%. Again, just keep your eye on the annualized return on investment. That's the key thing to look at. If it's over 20%, 50%, you're doing really well. These trades would be impossible without the knowledge from the masterclass and the understanding of the Tier 1, Tier 2 and Tier 3 charts. If you're interested in the masterclass, Perperatum has very kindly offered a partial CTKS masterclass scholarship. You can apply from the links in the description of this video. Here's another trade from Tomo. Same period of time, 16.15%, and you can notice the annualized return on investment is better than 20%. That's the hurdle. Here's another trade on Tomo for about 6% in 6 hours. Your key is to not worry too much about what the return on investment is. Here the Tomo trade in 6 hours was 4.56%. You look at the annualized return on investment. If you're continuously turning over these kinds of very good percentages, you'll make a fortune. Those trades that I shared with you, they take a lot of knowledge. They also take experience. I would also suggest to start small and scale. Don't feel any pressure at all to get incredible returns when you're just starting out. You just need to learn the ropes. We saw this huge spike up in Bitcoin. Now we need to know where the smart money structure is in the market. First of all, I'll just zoom in a little bit so you get a better picture, and then we'll throw on the indicator. There's a smart money sell area at 27,853. Bitcoin is currently 27,708. The good news is that we've got support below at around that 27,227 level, and then quite a lot of support at that 26,894 mark, and also 26,955. If we're going to see price come down, we could expect to touch this 27,230 level. If we get above the 27,843 level, the next level, smart money, structural level, is 28,700. If you know where the structure is inside the market, you're not guessing anymore, you're knowing. The other thing to note is that these particular SLs or Stanfield levels have been drawn up through the CTKs method using objective dynamic market structure since Bitcoin was trading from 2009. They're very significant levels. They're not based on RIP, recent indicative price. They're based on structure, and that's really important. Your key is to know where the structure is. An interesting thing to note, when we look at Ethereum, it's not up as much as Bitcoin. Why could that be the case? The answer is CTKs structure overrides. Now, what do I mean by that? If we put our smart money indicator on, we can see Ethereum has come up to a smart money sell resistance level at 1739, and it's been rejected by it, rejected by it, rejected by it. It's very important to know where the structure is inside the market. If you don't know, you're just guessing, and you don't want to guess. Professionals do not guess. They run the numbers. There are 27 indicators available from ctksmethod.org, this website just here. Knowing where the structure is a complete game changer. For example, when we look at XRP and we throw on the levels, we can see that we bypass several areas of smart money sell resistance. There was so much force and pressure inside the move, but it got stopped out at 54.43 for XRP. And there's a couple of smart money sell areas in there. The next area of support is around that 53.78 and then down to 53.37. We start to get much stronger support at 52.89. Remember, price is always moving in a wave, and it's critical to know where their structure is. You might think that the structure is very easy to draw up. If you know the CTKs method, you know it's not so simple to do, but you're putting your hard-earned money on the line. So you should at least know where the structure is. These indicators are available at ctksmethod.org, and it will save you an enormous amount of time each month. Grayscale had a huge victory against the SEC. The SEC tried to block Grayscale's ETF on Bitcoin, and it was overturned. Specifically, looking at the facts of the case, and there are about 21 pages here, so I'll just pull out what you really need to know. It's right here. In the absence of a coherent explanation, that means a reasonable explanation, this unlike regulatory treatment of like products is unlawful. The SEC said that futures Bitcoin products were allowed to be approved because futures were regulated and couldn't be manipulated. Of course, everybody knows who's been inside financial markets for decades that this is just not the case. Futures often are used to just push price around all over the place. But the concept is that the judges found the spot market is deeper and more liquid than the futures market. So manipulation should be more difficult and not less. This completely floors the SEC's reason for approving futures products but not spot products. The judgment found that the SEC had inconsistent, arbitrary, and capricious results. Capricious just means random, lacking in logic, thought, and reasonable standards. The SEC had insufficient reasons for treating similar situations, spot versus futures, differently. The thing to remember, the SEC, when the XRP Ripple win came out, of course the SEC was going to have another go. It's a legal-based organization. All it knows is how to appeal. The concept is it's absolutely cornered itself. By approving crypto futures products and not approving spot products, there's not sufficient difference between the two to warrant approving one and not the other. When people get into the market, it's important that they understand how the markets work. Unfortunately, retail or just new investors and traders, or traders and investors that can be there for a long time but don't have this professional mindset, they can be very easily swayed to buy on green and to sell on red. Professionals do the exact opposite. All of those trades that I showed you were basically buying on red. The price was coming down, but I knew what I was doing. I sold on green and bought on red. It's absolutely time for you to be a professional and a professional trader and investor, because the two go together. You don't have to pick one or the other. You're just after a percentage return. Professionals have a very specific way to look at the market. They look at the market pulse through those 27 indicators. They do their analysis. They find what's hot and what's not. They do their three-dimensional risk management because they know that the market pays for synchronization. They have high levels of knowledge and flexible rules. They don't get sucked into a story. They look at price and treat it as the reality. They make sure they remain independent. They have an abundance mindset, which is probably the most important thing. If you don't have an abundance mindset, you will be a spectator or a runner. And unfortunately, if you're a gambler, that is a very nasty situation to be in. Of course, what I'm talking about when I refer to gambling, I'm saying professional gamblers are not gamblers. They're professionals. They run the numbers. If they're playing cards, they know all the percentages. They're not guessing, they know. You don't want to guess, you want to know, and you want to know how the markets work and how they work together. Inside the crypto market, many people would just think it's about Grayscale and the SEC. That's part of it, but the truth is it's yields and the DXY being the predominant driving force. To get the knowledge, you must have the foundations. You must be able to collect probabilities and understand upcoming events, and then need to find the market's focus, enhancing your pattern recognition before you buy and sell. And there's so many ways to do that. You must master emotional control with positive excellence. You will find that risk will create fear. If you find the fear immobilizes you to either being a spectator or just plain running away, when the markets go red, people just sit on the sidelines or they run away. When the markets go green, they pile back in, only to be whacked by professionals who know how the system works. You want to be excited in the red and a little bit cautious in the green. Smart money knows the rules of the game, and there are a lot of rules. To become profitable inside financial markets, you need the knowledge, the experience, and especially the emotional control. You need to just give fear its marching orders and send it on its way. You need to replace fear with courage. And this is not an easy thing to do, especially when you put your hard-earned money on the line. That's why we have the CTKs Creed. These are daily positive affirmations for abundance, financial success, and happiness. Knowing that the universe wants you to succeed, that there's a higher power out there, just supporting your decisions is incredibly important. If you feel that way, if you feel the road ahead has opportunity, you will be able to show kindness, integrity, and gratitude each day, which will make life a happy life. A lot of people get sucked into the concept of buying Lamborghinis and Ferraris and all of that kind of thing. What is more important is who you become as a person, not what you get. As you get older, you realize you just can't take it with you. But you can spread love and kindness to other people, and that is true wealth. If you believe that the world is for you, you will know that opportunities in life reset daily. Anything that goes against you will be scrubbed away in the next 24 hours. You can start fresh again. Many people have well-meaning parents that don't do well. Many children are not raised with a sense of worth. That's why it's important to know that you are worthy. There will only be one of you. There can only be you doing you. So many people are in a rush to get everywhere and everything at once, and that's just not the way the world works. Instead, we say, I go slow to go fast. Just getting your foundations right is critically important. If you don't have the right foundations, whatever you build will fall over. It takes time to be successful in every endeavor, and trading and investing is no different to anything else. That's why you start small and scale. Just focus on that annualized return on investment. Aim at just turning those small percentages over and you will see enormous gains. It's always said that life happens to you when you're planning something else. So just know life is always redirecting you to your ultimate beneficial path for yourself and other people. That's why you can say life pullbacks give me strength for the next life rally. In anything in life, you need to be dedicated and committed if you wish to be successful. The key of life is to either win or learn and never blame. If you blame, you disempower yourself and you lose the lesson. If you lose the lesson, it will come back and bite you even more severely next time until you start paying attention. That's why you either win or learn. There's never losing in this world. There's always winning or learning. And the key is to always solve your problems with positive excellence. Positive excellence is how you get sustainable fulfillment, meaning, happiness, and success. So many people define success as just having a lot of money. It is not. Money is just one component of success. What is really important is who you become as a human being. If you're creating inner peace and outer peace in your life, if you have the ability and strength to be kind, if you show courage in the face of fear, integrity when other people would lie, cheat, and steal, persistence and commitment when other people would be lazy, gratitude and happiness when other people would feel entitled, you are on the way to a truly magnificent life. And money will come just as a byproduct of who you are. Thank you for being here, and thank you for spending this time together. It's really beautiful. If you thought trading and investing was just about finding levels, it's so much, much more. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again tomorrow. Bye for now.